Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets companies try to hide behind all those fancy financial words. Today we're diving into a report from a giant in the financial world, JPM Chase and Company. And let me tell you, it is not just about numbers, it is about where this massive institution is placing its bets. Before we get into the nitty-gritty, if you love getting clear, no-nonsense breakdowns of these complex corporate filings, make sure you hit that subscribe button. And if you thrive on even more exclusive insights and want to connect with a community of fellow financial sleuths, join our Discord server. The link is in the description below. So, what is the big news from JPMorgan Chase? Well, on the 22nd of January 2026, they announced the closing of some pretty significant public offerings. Think of it as them raising a whole lot of cash to fuel their future operations, and probably some new ventures too. Now, you might see a lot of technical terms here like floating rate notes and fixed to floating rate notes. Don't let that scare you. In simple terms, they've basically borrowed a ton of money through different types of loans or bonds. They're borrowing $400 million in one type of loan and then another $2.6 billion in another type that is fixed for a while and then floats with market interest rates. And to top it off, they're borrowing another massive $3 billion in a similar loan, but this one matures a bit later in 2037. This is essentially JPMorgan saying, we need capital and the market is willing to lend it to us. These aren't just random loans though. Look at some of the other securities they have registered. You see things like depository shares for various series of preferred stock. This means they have different classes of ownership or debt instruments that pay out dividends or interest at specific rates, like 5.75% or 6.00%. It shows they are a very complex financial entity with many ways of raising and managing money. They are also guaranteeing certain notes and ETNs, which means they are essentially vouching for other financial products, a common practice for large banks. Now, I know what you are thinking. All these numbers, what does it really mean for the company? Well, on the surface, completing these offerings is a sign of strength. It shows investor confidence in JPMorgan Chase. They were able to raise a substantial amount of money, over $6 billion in total from these note offerings alone. This capital can be used for a variety of purposes like expanding their lending business, investing in new technologies, or simply strengthening their balance sheet. The fact that they're filing legal opinions from reputable firms like Simpson Thacker and Bartlett LLP just confirms that all of this is legitimate and above board. It is part of the standard process to ensure everything is legally sound when issuing securities. It shows a commitment to transparency and following all the rules. Looking at the broader scope of what they have registered and can trade, it is incredibly diverse from common stock to preferred stock to guarantees on various notes and even ETNs that track specific indexes, like Alerian MLP Index ETNs or Inverse VIX Short-Term Futures ETNs. It paints a picture of a financial powerhouse involved in a vast array of financial instruments and markets. This diversification, while complex, allows them to potentially profit from many different economic scenarios and customer needs. Now, let's talk about the story here. This filing isn't about a sudden crisis or a groundbreaking new product. It is a routine, albeit large, financial maneuver. JPMorgan Chase is actively managing its capital structure. They are raising funds in the debt markets to support their ongoing operations and potential growth. It is like a household taking out a mortgage to buy a home or a business getting a loan to expand. The scale here is just immense. They are essentially leveraging the market's appetite for their debt to fund their vast financial empire. The fact that these offerings were registered under the Securities Act of 1933, using Form S-3, means they are a well-established public company that meets the requirements for a simplified registration process. They've done this before and they're very good at it. It tells us they are a mature, predictable player in the financial markets. So what is my take on all this? JPM Chase is demonstrating its ability to access significant capital. This is a testament to its financial strength and the market's trust in its leadership. The sheer variety of financial instruments they are involved with, from basic common stock to complex ETNs, shows their deep integration into the global financial system. However, with this immense scale comes significant responsibility and risk. While this report focuses on capital raising, it doesn't detail the underlying risks of their investments or lending activities. A company this large is always exposed to economic downturns, regulatory changes, and competitive pressures. Their success hinges not just on raising capital, but on deploying it wisely and managing the inherent risks across their diverse portfolio. In conclusion, JPMorgan Chase's January 2026 filings signal a company actively managing its financial health and strategically positioning itself for the future by securing substantial funding. They are a titan, and their actions, while often complex, are crucial indicators of broader financial market trends. Alright, That is our breakdown of JPMorgan Chase's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to join our Discord community in the description. Thanks for watching. See you next time.